What's up, everybody? Hi, friends. What's up, everybody? Oh, wow. Time just kind of flew out of nowhere. Sorry about that. Oh. Let me load everything up here. Woo. All right, so we get out the door. Let's go. Let's go. So, by the way, I'm up 16% on the small account challenge. Woo. Wait, what did I just do? Oh. Wow, we already hit upper DD band overnight? No. It's just how much I've been paying attention today. Well, it looks like that's the end of the trading day, probably. Let me double check this. Hold on. Oh, shit. We did. Okay. What's up, friends? All right, let me go to the music. Oh, time just snuck up. Sorry about that, you guys. All right, BL something. All right. Matt is here. Yes, Matt is here. That black coffee hitting hard. There you go, baby. What's up? Matt was up like schooling people. Yeah. No, people were like asking questions. Like, well, here's one thing about the educational style at R. So, okay, we hit upper DD band. I'm pretty much done for the day. Resilience is really strong and positive. Anything outside of here is irrational on band break. So we're going to look for yellow line or red line, right? That's, and I'll show you guys how to do that in a little bit. So really it's irrational illiquidity pivot. There's really nothing I do on a move that's this strong out the door. Ideally, since I don't trade irrational, no trade, like I'm not gonna do this. Ideally, if I get this is my entry point back to DD. That's the trade I want. Okay, that's the only trade I want. So that way I can trade inside the bands with the yellow light and do nothing else. I don't chase DD band breaks. Does everybody understand that? That's my trade today. Let's analyze VIX really quick. So about our education, right? So I'll tell you something cool. You know, we operated more like a think tank for a while, where we spent a lot of time as a community coming up with tools, solutions to things, ideas. I mean, we have like 15 unique indicators, right? That's one of the bread and butters here. So each one of our things are created in-house, and you typically created by like the group of folks here. It's not just me. I say created, like assisted. Like it's not just me with all the like credit, right? Some people have come through and we've teamed up. There's different project teams come up with different things. You know, Rocket Scooter comes up with stuff as a team sometimes. For a lot of the tools, like the things here, like hedge pressure, liquidity map, a lot of those, resilience, like those are my brainchild. But even as I'm making them, I bring other folks from the team in to consult, or other members to look at it. And we were very think tanky about it. And the goal was to be real data driven, right? Like everything we do was to be based on data. And like peer reviewed, and everybody in the community like look at it and like it and make sure it works before we release it. I mean, that's how it's always kind of been here. Okay. So when we made our videos, when the group was like much smaller, our videos are very much like complex. They would go over a lot of the science, a lot of the math underneath the hood. And then as we started like, you know, scaling and getting big and releasing the platform, we started to find out that, you know, that's not everybody has the same appetite for, you know, math as we do. Hold on one second. So we made the videos like a little more, I guess to say simple, like easier to follow, and like more applicable than anything. So, but if you guys have questions about the complexity or whatever it is we've made, I mean, feel free to ask anything. We're glad to answer your questions about how the stuff works or kind of what's going on under the hood. We used to make our trading videos like as heavy as they used to be. They used to be really long, hours-long videos on each topic, and like a lot of people like that early on, but then you guys come in here and new folks, it's a huge ramp up, and it's not really necessary to learn how to use the platform. Bitcoin is ripping today, that's what I heard. All right, so basically I'm going to wait to see if we get a dip to hedge pressure and buy. There's really nothing I do outside of this. Let's take a look at NASDAQ today. To open an account for futures access, you do. Yeah, you have to. You actually have to go out there and get futures data from a futures broker that we have, if you want it. Other than that, your risk interval sheet will show where all the data is. So today is just a kind of a glorified sit out day. Right out here, we have irrational signals. There's really, I don't really trade outside of here. So I don't like to play that game. What I like to do is I like to play once it dips back in, if possible. Can't believe we've already moved. Let me double check that that's, yeah, that is correct. No VIX issues, markets moving higher. Let's take a look at monthly map. Monthly map, nice and clean and bullish. See how the chips are looking these days. Soxel stabilizing. I do like that. I like the chip sector starting to stabilize too. That could be some good momentum. Stabilizing. Bull side getting stronger from here. This might be a good dip to buy week for Soxel. This could be a big rally week for the market. CVX, yeah, let's take a look. You've got that opening pressure monthly hedge pressure is kind of like, let's see where that is really quick. So CVX is one of those stocks that has support down in here, and it's hard to trade inside of here. Like I would support inside of there. So any stock that gaps up and holds its open is a potential trade, like with supported open with a resistance underneath. Open and close are great pivots in general. For the liquidity map, right, there is no pressure up in here. Just down here would be actionable. So like swing traders, there's long pressure there. There's long pressure there. So here I'm looking for the market to dip to hedge, and I'm just going to take a long, see if we get a scalp on that. So by the way, those of you that are, you know, interested in how I trade or learning from me, doing that small account challenge we said we were doing. The 5,000 started about like a week and a half ago, give or take. 5,000 was the start. What is this, 58 something? So we're up, what, 17%? And just taking it slow, just growing the account little by little. You guys can watch me go. I think I've only had a couple losing days total so far in the last couple weeks. Not too bad. How long do you wait after the gap? Normally what I do is, and the way that I see it, Amory, is pretend that this is at any time open and close of the equities market in that redistribution zone. Either one, anytime you're outside of this box, like if you gap up and go, or gap up and fade and fall, or gap down and go, the box itself is resistance. So what I normally do is, depending, if it's an equities trade, let's talk about SPY really quick, right? So an example for like, when I'm looking at futures, I'm gonna use SPY as an example. Here's a great example. Oh shoot. Windows 11, I swear I need to roll back to Windows 10. This is happening a lot with Windows 11 since I upgraded it, or upgraded to it. I get this like browser violation. Let me try it. Let me load everything back up. It's only an edge too. It's weird. Okay. Back to here. Let me clean off the chart. So what I normally do is, with the index, I have resilience as a guide. If resilience is really strong, which it is, anything greater than 0, it means that the market is likely to bounce off of there or flux through there. So I have pivots from open and pivots from close as long as res stays above 0. So how long till after? So normally what I'll do is, if it just bumps up a little bit, I can take like a small position long, or if I missed it like earlier, I haven't done anything. Anytime it comes back to here, like in this instance right here, I'd start building a position here if it's strong enough, which it is, to long it further. But see, we're outside of like the boundaries where I like to trade anyway. So normally like right here is where I would long for that gap and go situation, knowing that once I commit, I commit. So if I long from here, I know that I have the ability to long from the middle as well, because the middle also supports. They're both options of support. And so I'll take like both legs of a trade when res is greater than 0. One of our rules is that when you move too far in futures, you hit those DD bands. I don't necessarily like to trade much. But normally it's how far above. It's if it goes up above, and ideally if it bounces off of it. Just your traditional support, resistance, break, and support. On the test of support, I usually like to long. If I'm feeling adventurous, and I know it doesn't have room to fall before I hit like wherever my stop would be, sometimes I'll long on the green if I'm just like seeing it go. But I try to give it a couple of minutes to start. Like this is the perfect opportunity if I were to trade it. This is exactly where I would buy on the open test, the gap and go test. It is strong enough that it might actually bounce. But even so, I like to chase trades like that if I got plenty of room to move. That way I can have some good reward to risk. Like now, this is where DD band would be. So ideally, I would like to trade from here to there. That seems like an adequate scalp for the bull long up. So I'll probably scalp that one inside of here with the small position. Yeah. All right, so this is the question. This is it right here. Do I want to take a scalp from here back to there? Good Lord. Status access violation. See, that's nothing to do with, like, it has to do with, like, browser extensions or something. This is not like a memory thing. That's so weird. All right. So an example would be this is where I would. This is where I would if I were still going to trade this. And any breaks like this, it's still like a small position if I do trade anything, but I don't like to trade outside the bands. When you move this far overnight, this is like, you see how there's high volume at each one of these. Like it gets pretty much, there's high volume pivots on these bands, right? So whenever you get to them, see how there's pivoting. It's up here, since we call it irrational, this is one of our rules, right? Irrational, this has to do with this. The market's already stretched too far before the equities market opens, like the futures market has moved too far. And so what happens is it can destabilize things, and sometimes you can wake up and then it pulls back a lot. It can be irrational and more volatile. Here's the evidence of that volatility. Do you see that? The market has bigger V's. My volatility is the amount of, V'ing you get. Irrational comes with more volatility, which is why we trade small. Possibly, yeah. I don't know if I would say that in examining a straddle, it's a good question because you would need, like, straddles pay off when markets are volatile, right? You buy a put and call and your total premium paid, you need the market to move. Essentially what happens is the market needs to move a certain amount of volatility to outweigh the premium spent on both the options, right? So do I expect this to be unusual volatility and for a straddle? Maybe not in a generalized, and maybe like if we were in a volatile market in general, like VIX is like 25, 30, 40, probably would get that volatility to warrant a straddle. I think even though volatility could be going up a little bit in the low environment, it's like low volatility gets slightly more volatile. I don't know if it's going to have the juice to make a straddle pay off. Typically, you know, it would be very rare for this to spontaneously create volatility to a degree that would make it problem. But I would say I'd ask Ashton what he's done in this environment. So I don't really trade straddles. You might notice my strategy tends to avoid volatility as much as I can. I'm the best you've seen at preserving mental capital and actual capital. Oh, thank you. That's the one thing I tell people, you know, everyone out there has a style or system or strategy. I really go out of my way to at least let you guys experience like my day to day, what it is I'm doing, and you can see, you know, how I'm behaving, how I'm acting, and just watch it, right? It's different for somebody to just show pictures or to just talk about it. It's another thing to watch. You guys have watched me be in trades, dig out of trades, take good losses, trim out losses. I mean, you see me do a little bit of everything so far, right? Yeah, will I get chopped up and frustrated? Yeah, I mean, it's like, and now my brain goes, oh man, I'm probably not gonna make any money today because I'm gonna sit out. But then I don't really need money, so I don't see that as something that I'm missing out on for real. But as Anne-Marie is asking, like, when do you trade? An ideal situation, if we weren't outside of the DD band range, do you see how when you break out of open and you support it open, that's usually when I long. And I would long to something like a DD band if I have the answer or have the ability to go there. And if I have a bull long up, I'd have a second entry from here to here, which is basically both legs of this. And I usually use that as a guide. So if I long at the open, I can long it there again. I can stop right there. And then I have my reward. My risk and my reward. Because up here, it's kind of no man's land. We're retracing some down moves. We usually use what's called we call them red lines or illiquidity pivots. Red line was the nickname people gave them as a possible pivot when markets are illiquid and irrational. So let me go to Thinkorswim and we'll do the exercise really quick on Thinkorswim. Since we don't have tick charts on Market Scooter yet. Hold on one second. See if we actually have anything impacts from the other day. Oh. That's right. It's all about preserving your sanity. I mean, in reality, that's kind of the best. Oh, that cleared out.
I mean, there's probably a lot of things. Yeah, maybe VOO or Treasury or you know, whatever else.
Not that either.
Well, no, to be fair, I don't think they're just holding cash because they are holding treasuries and everything else, and for a long time that was considered nothing. Now it's considered 5%.
Right. Yeah.
Here we go.
That's what I was implying, by the way. I was just saying, like.
Well, we already passed that. That's the next one I see. 43.74, and there's the pivot tap there. There's the pivot tap there. Okay, so that one's already been cleaned out. I don't see anything back over here. Let's go back to previous day.
Target kind of had a dip here, and it's getting a V-shaped recovery. Target calls would be pretty interesting.
44.03. But we cleaned that out too. We retraced that the other day as well. So there's really no nearby pivots either. This is a trick. See how each one of those are pivots as well? This is another trick that we teach. This is our illiquidity pivots. You'll find this in the exit targets videos.
Someone down below, tell me if I'm stupid. Or I'm just doing it with a calculator.
Yep.
Blake, what are you still in right now? I know we have more bank earnings today. Obviously, Netflix and Tesla are the biggest of the week. What do you think? What should we think about that?
I could here. But this week, tomorrow we got J&J, Bank of America, Lockheed Martin, Goldman Sachs all done tomorrow morning. So those on watch. But later in the week, we got Tesla, Netflix, Taiwan Semiconductor, American Express, all the tech area, and some other ones like Procter & Gamble, Morgan Stanley, ASML, and some others in that area, AT&T, if anyone cares about that. So it definitely this week. Well, pretty much every sector I would think would have earnings and news going this week. Not every, but a lot.
Yeah, I'm definitely bullish on the LMT. You know, it's a war name. It's definitely be interesting to see their earnings here. Yeah, and Janet Yellen came out today and said that we definitely have enough money to work. So put some money into the bank. I know, Blake. And inflation is transitory, am I right? Yeah. Watch China make it 3 worse. Come on, man. Don't start putting that.
So up inside of here, since we're still trading internally to a bunch of days, I really don't have a lot of resistances that I can see in the short term to really take this. So I'm not going to trade at all today.
No, it's been sort of sucky. I mean, for me, it's been sort of sitting down between 265 and 250. Yeah, there's some opportunity there, taking it here and there, but I've been mostly sticking to the indices lately. But I am really excited for the Tesla earnings. Oh my gosh, yeah, really excited for that. Of course, I'm bullish. I want it to be a double beat. Really excited for Cybertruck. You know, any sort of news that comes out, I'm gonna gobble that up. Yeah, definitely. I mean, it's my biggest long-term holding, and I'm really excited for the future of Tesla. But yeah, I'm probably not gonna trade it into earnings this week. But after earnings is, I'm probably I wonder if there'll be any accountability for that.
Never is.
Well, and it's news. Reporters never get any sort of, there's no confidence.
Right. Monthly maps are really showing.
Community knows incoming.
I agree. Get rid of that coulda, woulda, shoulda attitude. Monthly maps definitely solid for bull side. We said that the bull market is back. Tweeted that a couple weeks ago in monthly maps, or like last week when monthly maps turned around, started showing bull support on both.
Yeah, a little bullish. And yeah, Monday's usually lowest volatility, lowest volume. I usually, Mondays are
Strong, strengthening bulls, weakening bears, and this is great. Market's gonna have another leg up, which I like. I think we'll write up an expiration.
one thing. It's, yeah, I really like SPY here. I think
Think EDD band skip you out of that QQ HP long? Yeah. I think it's just gonna bounce around today. It's really hard. It's really hard to trade outside of here. Do you guys see? And this is what we say. This is a testament to what causes volatility. And Anne Marie, she was asking earlier, like, normally I would take my trades, my day trades. I like to trade inside of the bands where I don't get that unusual volatility. If you do, the alerts are there to alert me to trade small, even if I do. So you can kind of see how, I'm just going to draw some V's here. See how it gets choppier, right? This is what happens when you're pushing outside of the bands. It does get more volatile. We can clearly see that while VIX is trading kind of flat to down, in general, the market is starting to destabilize a little bit. It's not cleanly going to go up. It's probably going to choppily do whatever it's going to do, right? Let me talk in spaces real quick.
So, well, I think, you said, hey, I like the opportunity now. I hope it doesn't dry up. Might be drying up, unfortunately.
Which opportunity? You're saying like just price action for the day?
Yeah, price action's slowing down a little bit from what I see across the board.
Yeah, I think there's also a little shock right now in the system with everything that comes with like crypto there for a second.
So you'll see how, and I guess the more you guys watch me trade, the more you'll see how the rules actually make sense. In reality, if you just think about it, right? I know a lot of people come in here trading a certain way or behaving a certain way from the past, and trading is a frustrating environment. Clearly, I could tell from reading market chat last night. A lot of people, maybe they don't tune into the stream. Maybe they don't learn how I do what I do. A lot of people have different styles of trading though. And a lot of people that I watch overtrade. I'm talking overtrade. Like, they try to make a trade every day. They're always trying to catch every wave, trying to catch every move. And that's, that's not the worst idea in the world, Certainly like the best idea in the world in my opinion, but that's just my opinion. I'm just one trader. The style I have, I perfected for myself. Now, I'll explain why the style I have is good for most people, I think, is because, being a trader, being on podcasts or spaces, on other shows in the morning, building a trading platform, customer service for all you awesome folks. It's a full-time, it's like 4 or 5 full-time jobs on top, it's like I don't have all day, every day to stare at every opportunity I can to move. Like if I was just sitting at home being a trader and doing nothing else, I certainly would have evolved to take a lot more trades and take more risk and be a little different in my style. As the years went by, I learned that my strong point was that opening trade. Get in, get out, within an hour, I'm done. If I don't do that, I realize I tend to overtrade. I tend to become sloppier. If I get in a trade and I'm holding on to it and it goes against me, if I was in a trade for 5 minutes, I'm not that committed to it. I can easily get out quick. If I was in that trade for under an hour, I feel that way as well. But what if you're committed to a trade for like 4 or 5 hours, you're fatigued and it goes against you? I realized me as a person was less likely to cut my position and more likely to hold and take a bigger loss. Like I wasn't as sharp. I wasn't as ready to abandon. The more you trade, that emotional fatigue is a problem for many traders. And that's kind of one of the things that trading like one trade a day and sitting out when you don't like it, you prevent having emotional fatigue. That's exactly where I'm going with that. So it's like you can see me like quickly get out of a position. I'm sure if I was trading all day, I wouldn't be as good at that. The more you're committed to something, the harder it is for you to walk away from it. It's like a relationship, right? So as I learned to kind of marry my time better, getting into a trade and getting out and kind of calling one trade a day and sitting out is not a terrible thing, because people may not understand that, and it may not seem like a lot. I'm up 17% on the account. Now imagine whatever account size you have, 17%, and this is not YOLOing trading, this is scalping micros. 17% in less than 2 weeks. And as a trader, that's phenomenal, like percent wise. Now, it doesn't mean that like here I am, high rolling with this, the physical gain, but it's discipline and systematic. And if you're trading for a living, you're not looking to take risk to lose what you have. You're looking to grow when growth is available and not grow when it's not. So as I'm committed to maybe by the end of this year, hopefully get that, 5K closer to 25 or 50 as the months go by, you're going to see me inch my way there, not trade when I don't like it, not take abnormal risks. And what I see a lot of people, especially in chat, take all kind of trades, up, down. They don't follow any of the rules. They join Rocket Scooter and use the tools, but they don't follow any of the rules. And the rules are very important because we do teach that there's a probability that things operate better under certain conditions. The probability goes up. There's a probability associated with everything. People were talking about that last night, like in some environments, hedge pressure breaks more than others. Correct, right? You can assume that in bear markets or volatile markets, irrational markets, you're going to have a lot more breaks than not. And I see that people that are looking into that don't follow these irrational rules. The most important thing to note is I only make certain trades when things line up. And these rules are very good at telling me when things don't line up. Red and yellow is not good for things lining up. So in an environment where you have red lights flagging, the probability of hedge pressure breaking is much higher. That's why we say it's irrational. In irrational markets, you sit out because we don't know the strength of the market being able to plow through that delta hedging buffer zone area where order flow is going to come against the move. You don't know in irrational markets because people are going to behave more irrationally. You're going to see that people have probably margin calls, liquidations a lot more often. So in certain regions, I don't like to trade. And like this being one of them, these lights are red. I don't like to trade. And each one of these lights have a reason why I don't like to trade. So keeping your activity small, in my opinion, is the best way to make money as a trader. If you can just grow your account when things line up, bet heavy when your confidence is high, bet low or don't bet at all when your confidence is low, and you know the environment. What did I say today? It's going to be volatile, choppy, and have a hard time moving up. If it's going to move up, it's going to have to chop its way higher. And then I look for a pivot, and I don't have a good pivot to go off of. It's very impossible today for me to figure out something. So today, if it does move, it's going to randomly move somewhere. And look what it's doing. We're just chopping everywhere. At least I can see that from the start of the day, right? And so each of these rules we have are observational, and they have a theory that supports what went into the indication. The observation matches the theory, right? Mental fatigue is real. Anne-Marie nailed it. It's like whenever you're constantly, just stuck in something, you start to lose. That fatigue just makes you, you're not sharp. You're not able to, you're not on your A game. Right? So you have to kind of be careful. Just over trading is a big deal. And I know a lot of the people, there's a lot of people in chat were like, saying things about some of their trading styles, and a lot of them over trade, ignore the rules. So this is what I want everybody to know, because I was just reading what everybody was saying. People were asking like, what's the probability of hedge breaks, like in this environment? A lot of the discussions were like, what's the deeper meaning behind hedge pressure and how some of these things work? And I just don't really read Discord a lot, to be honest. And I was scrolling, I wish I had time, but I was scrolling through chat and watching a lot of people's styles. Like 3/4 of that chat don't seem to be following any of the rules we teach. So the rules, we have to make sure that that's the first thing you learn in the boot camp, which is the risk management rules. These are conditions where the probability is high. If all these lights are green, the probability is the highest. I'll bet harder. The pivots are sharper. If these lights are yellow, it's like the market is slightly becoming uncomfortable. I'll trade like half my position or trim. And if it's red, I don't like to trade at all usually. If I do anything, it's pennies instead of dollars, because you're going to be choppy, because you have a possibility of sell-offs. So conditions are very important. And what I was really reading is that a lot of people are kind of like in that mode that they have a style that they use and they utilize all the time. And that's one of the things that's not conducive, I think, as a new trader. You need to find a set of conditions that line up, that you can get in a trade quickly and get out quickly, to avoid that fatigue, to avoid getting zapped by a random catalyst, to not be stuck in a trade for 3 or 4 hours, and waiting until they line up. That way you're in fresh. You can cut quick if it's wrong. You can take a good position if it's right. Your confidence is high. You can bet harder. You have a good reward and risk, and you're done. I mean, it's really how you make money in this game. It's not trying to guess the direction of the stock market. There is no and I say this, no holy grail system that you can buy or learn that will work in all environments, up, down, multiple trades. It doesn't exist. It will never exist. It's impossible, because the basic flaw that most of those systems employ in their design is that you can predict the stock market to some degree. And the best part about Rocket Scooter is that at the core, if you dig through everything and you go down to the very first line and the very first code, and if there was like notes, the first thing you would ever discover about our process is we say the market is random. We already take that stance. The market is unpredictable. Okay, now where do we start? Let's build tools off of that foundation. Not you can predict direction, you can predict momentum, you can predict reversals. We say you can't predict any of that. That's a better foundation, because I think that matches all of our experience, doesn't it? So when the market itself is random, what parts of it aren't random? Are there pieces of it that behave consistently, or have a consistent output or consistent behavior? And then that's where we started. Not the market itself as a whole is random. Humans doing human stuff, good luck predicting. There are times of the day when it's more random than others, right? When volume is increasing, there's more human activity, probability goes up, that's more random. When volume is decreasing, there's less human activity, probability goes up, it's machines and more predictable. So little like observations like that, you build enough of those, you can build a nice little series of walls, right, to contain a strategy. So we're under conditions like A, B, and C. You can find some repeatable behaviors to exploit. And that's it. That's all we do, which is a very pure exploit type strategy. Most people with a real system that works exploit something that works under a specific set of conditions, and they only fire their trades under those conditions, and they avoid everything else. You find what works and you stick with it. See, there's that spreading volatility we talk about outside of DD bands. It's hard to move. You have V, bigger V, bigger V. This is exactly what you see outside of DD bands, and it's fairly unpredictable, and it could have very much done that as well. So that's why I don't trade it. And even if I was long and I got a burp like that, I'd be closing out. I don't take trades like this like they're going to rally straight. Yeah. And so Eunice says, thing is, I basically share the secret sauce to your system. I kind of do. I share enough that that everyone can kind of understand what's going on, but not enough that somebody can figure out how to remake it. So I try to balance satisfying people's curiosity without, giving away all the goods. But these conditions here, they're called conditionals. You can go read in the bootcamp docs and some of the write-ups there, talk about how important this is. These are the confidence we have. Now I came up with an idea a long time ago that at some point, once we have all of our rational rules and we have backtesting and historic data available, could the sum of all of these just give us a number, like an overall probability of how good we think our integrity of our style is? Like if each one of these under similar conditions, and they'll require a lot of math, there's ways you can do that. You create transforms. This is a math thing between each one of the rules and every other rule inside of it. So each combination of two will have a relationship, and when they violate, you can create a mathematical history or back test of each transform, and then create an overall effectiveness of your data set having integrity. Like if one thing moves, how's everything else expected to move? That's what transforms typically do. We see those in the plant back in the day. I was an engineer. Like if the temperature goes up on this side of the reactor, what happens on all those sides of the reactors under all these ideal conditions? Or what happens if those conditions fluctuate? What's the expected change there? So what the idea is that we can take all of the irrational rules and convert them into a probability, a confidence number. And that confidence, instead of having to see a bunch of different rules, could you just get one rule, one number? What is the confidence that I have in today's integrity? And confidence wouldn't just mean confidence in the move. It'd be confidence in general. It could translate to everything. What is the confidence? Resilience stays where it is, or hedge pressure bounces or whatever. If my confidence is higher, I can bet higher. Confidence is lower, I can bet lower. Something like that. So the idea is that in general, these rules help me gauge areas where I'm uncomfortable trading. And you can see, you can rewind the stream, and I said that markets are going to become unusually volatile, and it's going to be choppy, and if it moves, it's going to move quick, and I'd get out of the way if I got a trade. Like if I was long to there, I would literally be done for the day. If you get a little bone thrown at you like that, 15 points outside of DE bands, it's volatile instead of trending. So I don't bet on directional moves. Somebody said today about a straddle. The idea is that straddles take play on volatility. Like you essentially want the market to be volatile and whipsaw one way or the other, and jump quick. But yeah, so anyways, let me answer some of your questions. Not sure if anyone else has been experiencing this, but found that increasingly more challenging to map out red line recently. It kind of has been, because the market hasn't been illiquid, Garrett, and that's a great question. The market's been very liquid in general. You haven't really had big illiquid moves that have created those illiquidity pocket imbalances. Or so there's illiquidity pivot imbalances. Committed traders will show you the market's been surprisingly liquid. Even though you've had long selling, you've had shorts covering. So it's liquid here and it's stable here. In this downside, we haven't really had giant bouts of red sell-off days. The market's just kind of chopped its way lower. And the liquidity is a testament to that. And so red lines are characteristics and results of illiquid moves, which we really haven't had that many of them. Point number two is the VIX is really low. Low volatility means high liquidity as well. So you're not going to get big collapse days that squeeze out a bunch of people, margin calls and stuff that could create a lot of red lines on the way down. We're not seeing that, and as the answers are, it's a low volatile environment that's liquid. And that's a great question, Garrett. I like that you said that. It's just me that you know. You're having a hard time recently because there just aren't any. I just ran a couple of them, and there really aren't any open ones anywhere near us. The S&P has one at, I think I found one. Nope, we don't have one nearby. So there's really nothing to look at. Great question, though. Matt, if I'm looking at correctly, QQ looks more bearish going into next month. Let's take a look. QQQ. Does QQQ look more bearish going into next month? It looks in general, okay. So the monthly maps aren't really clean, giving us easy reads, right? They're very shattered ever since the Fitch downgrade event. The monthly maps are all over. Let's look at the bear side, which is what you're talking about. You see how it's just like all over the place? And as you're saying, correct, November tends to have a little bit more strengthening bear side. And it looks like after, so October expires here, November expires here. So this would be December, right? End of the year. This could be pre-positioning for, you know, end of the year seasonality. Who knows? I tend to keep future months with a grain of salt as timing the market. So what I like to say is that each month I like to analyze the current month as like the real strength. I like to look about a month in advance. And I use the future beyond 1 month because monthly expiration is a big change to all of this. The Monday after monthly expiration is a very big shift in positions. So to go forward from here, I use like November, December, January as a grain of salt. So let's analyze that so far. The bear side is weakening for 2 months and then strengthening for December. So it could just be people are, you know, looking for that Black Friday Santa Claus rally and then, you know, donut puts by the end of the year. Maybe they want to stay long to hold their bull position through the end of the year, maybe for tax reasons. And then these are puts that people have bought to hedge their longs. We don't know. But when we get to December, let's see what this looks like, right? So I'm saying that the market's probably strong, you know, stronger for a couple months. And then, you know, maybe December could be another wave down. We'll see. You know, I think that's more likely we go up and try to at least double top rather than sell off. I'm in the boat that we're back to kind of trying to double top at least this. So strengthening bull side, you can see that bulls are kind of just holding the fort, not really getting abnormally strong from here. And that's kind of what you can see in the commitment traders as well. The bulls are just perched and sitting still. Some liquidation, but like I think the next prints we're going to get some coming back in. But what we all see right here is that the green line is just kind of relatively flat. It's not growing. It's like the bull side of the market is just comfortable where they are, which is why we're not seeing strong amounts of bull zone pop up. There's not a lot of bulls jumping in at this point. When markets are dipping, we're starting to see bulls step in and buy some of these dips. But the frenzy of this straight up rally is pretty much over. So we're in this kind of boat that the market is just inching along weeks at a time. Like we're getting reads of like a week or two out. Great question. It does look like that bearishness could be coming in. But when I see this, I don't tell myself, okay, I need to buy some puts because market's going to sell off. I look a month in advance up to expiration typically to see how I'm going to behave. And right now, if it's bullish here, I'm bullish until then, and then I'm going to reevaluate then. So I'm still bullish through next week and the week after. And then when we get there, we'll see if we still have a little bit of bull or not. But it's a great question. In general, your answer is correct. It does appear like December is going to be slightly more bearish in a way than it is now, but it doesn't, that's just how the positions are now that far out. When you get there, you get closer to that, you can clearly, there will be some dynamic changes. We have 2 expirations between now and then. But great question. When some of the larger companies are very bullish, NVIDIA, Google, how do you interpret this? Thanks. Oh, 100%. NVIDIA, Google, while they themselves are monthly map bullish, there's still more. The QQQ, number one, tracks the NASDAQ stocks. There's more stocks in the NASDAQ that may not be as strongly bullish. You can go look at all of them. Right, like NVIDIA definitely looks bull strengthening, but we only have going through 4 weeks, right? This doesn't extend that far out. So we have the calculations. I don't know. It's kind of like a thing that we need to do as soon as we're done with the optimizing is the stock monthly maps need to present themselves further out. We calculate them. We just don't display them. There's a bug with this one and this one on the stocks. It's only showing the first 4 weeks of data. And that's, like I said, a remnant of the architecture. And that was another question somebody brought up the other day. I know in the wish list, a lot of you guys are like, why can't we have this? Why can't we have this? And the idea is I'd love to have all those things. We're still a small-ish team. why is there not a mobile app? Why can't I have historic data? Where's the back test? We're building stuff as fast as we can, right, with the team we have. And so right now the goal is integrity of the platform and making sure we can expand in this big marketplace that we've built, and other things that's solid there. But all these other things we do want to build for you guys, we will build them eventually. We just have, like I said, we've made such a complex piece of machinery with such a small team. It's a great feat to have done that. We're still at startup mentality here. We do have 25 people on the payroll. It's not like 1,000-person Google. We don't have the ability to staff that quickly to build that many things at once. As we grow, we expand and bring more people on, and we're building more things. So just be patient with us as we, fire off the things y'all want. There's just a schedule and a timing of that. So monthly maps, back to what you said. We only stop, part of our architecture, as I was saying earlier, is that we designed our old classic app. I can't remember classic app, right? We didn't have a trading platform in mind with charts, with historic data, nothing. We had an app that would display hedge pressure, liquidity map, and resilience for you. That morning, you push the button, here's the numbers, you're good. You can put it on your own trading platform if you wanted to. And every day you'd click the button, it would bring the new data forward, you kick the old data out. So that architecture just to send you hedge pressures every day in an app. We built a trading platform on top of that architecture, which is why it only fetches one day's worth of data to display it. And then when the new data comes in, it replaces the old data, and that's it. So it might sound like an easy thing to say, hey, let's turn on historic data, but it is a massive architecture change. Our database, our server is not built for storing and transmitting that data. Like historic hedge pressures, for the first, we've been pulling data for years. We can go back and retroactively calculate historic hedge pressures. Just to run the equation to go back years just to calculate that data. First of all, we have to revamp our database to store that historic output data. We store the raw data, that's it. So we'd have to populate the historic data in the database, architecture change. We have to update and recreate different types of connections to the platform to be able to transmit a stream of data that draws historically on your chart. Then it has to be modified for each time frame. We're not going to show liquidity maps on an hour chart or a day chart. So we'd have to have different drawing modes for each one of them. We have different APIs, different architecture, different database. Then we have to retroactively calculate years of hedge pressures with all that data. And I could push a button and probably take a month to just to run all the calculations because there's so many days and data to chew through historically. So we'd have to have a server running just to crank out the output for display data. It's not just like a turn on the button, let's draw the things kind of thing. And that's because we built the platform on top of the framework of a fetch type system that would fetch data and just draw it. So we still have that, and we're still building into that. As we asked people before, early on in development, we asked the community to vote. What would you guys rather have? Monthly map, liquidity maps on the chart, the little diagram here, and DD bands and futures, or do you want us to give you historic data? Right? And people voted, and pretty much everyone was like, no, let's get the features out. Let's get the rules in. Let's get the alerts in. So we kind of drove development based on what the community at the time wanted. And now one of the bigger projects that we do is to change that architecture for our specific black box to recall historic data and create a backtesting module so we can backtest different conditions and create different rules and see the historic probabilities of hedge pressure breaks and stuff. That's a huge project, and it's a big project. And so to take that on, we need to make sure that the platform architecture is solid for that type of connectivity. So just letting you guys know, they were talking about that in chat last night. And then somebody said, why don't we have a mobile app and why doesn't it work on different devices? It does because it's in a browser. You can load up Rocket Scooter in a browser. That's the most universal way to approach it. It's universal so you can take your stuff, you can log in anywhere, whether it's a mobile app or a tablet or whatever. But it's also made so that you can if we were to make a mobile app, an iPhone app, an Android app, they're three separate environments. We'd have to have three different teams coding in each environment. So we do a release, they'd have to make that kind of release in 3 different places. Deployment becomes harder. It's more complicated with a team our size to build a mobile app. It's just a small value add. And so we're building other things first. So just some questions people fielded last night. Yeah, I was answering everyone's questions last night. I love peeking into Discord and kind of following up with you guys. Spy just running, yeah. Kiki running as well. So back to monthly maps. NVIDIA and Google, they show bullishness in the short term in the 4 weeks, which does kind of match what you see in some of the other liquidity maps as well. If you really zoom into this, right, you can see all the way up until about the middle, end of October. Same thing here. You have bullishness for 2 weeks till the end of October. This is still bullish-ish until the end of October. So this matches this. You need to look at the dates. So I'm sure NVIDIA and others will likely show that similar pattern if you were able to show the data through December. But as I was describing earlier, the mode here, it's not really a bug. It's more like the mode of monthly map. We only display, like our database is only built to house and display just 4 weeks of this data because we didn't. Yeah, like when we were planning monthly maps, we didn't, normally what we originally didn't do was monthly maps, before we knew more about them, we would stop at expiration, right? Expiration was like where you'd stop, and then once you pass monthly expiration, you pull out 4 more weeks. So we only calculated them up to the nearest expiration. So to optimize on space back in the day, before we kind of upped our infrastructure, instead of slowing down, like when you're doing these calculations, it's got to run them, and so the more you do, the more it slows down. This was a memory choice for myself. So, well, we only really analyze it for the first month, and while having additional data is good to know for future pivots, it's not necessarily like super actionable. Like I said, I wouldn't be buying puts just because it does that in December. I would know that December could be an inflection point, but I'd approach this when we got to December. And then so to save like, I guess, calculation power, it's not really a display bug. This actually was a design choice to mean that like we don't need to show all the information for all the stocks, just enough that makes it actionable where people normally trade. What that does is it doesn't slow down the other calculations. If people want liquidity map the moment the market opens, okay, you got that really quick. If we were to abnormally calculate more data beyond for each individual stock for monthly maps and run them, then it would slow down this and everything would be slow. So back in the day, when monthly maps were being created and made, that's been over a year, right? We did this so that it wasn't, this shorter calculation span was less bandwidth and less processing power on the servers. Now we have the ability to do it. So now we just need to, as we redo the architecture, monthly maps will also extend out as long as there's options or display them. So more questions. So like everything we made was like an evolution. Had we started out with a company that, got $15-20 million in seed money, and then we went out and staffed up and planned and built a trading platform from scratch, I would design it completely differently. But we went from a fetch and receive app that would ask for 1 day's worth of data, like ask for a day, get a day, and that's it. Then we evolved that to have charts, and then we evolved that to have scanner, and we evolved to have monthly map. Like all these other things are built on top of the framework there. So we're building, like, the reason instead of going back and redesigning the architecture is we never planned on Like when we designed this app 4 or 5 years ago, we were working on that. The app was the end goal. And then as we're designing this app, we were like, oh, let's build a trading platform. Like, 3 years ago. Like, let's build a trading platform. Okay. But it was like, okay, well, we have to know that the trading platform is going to have limits. You can only get 1 day's worth of data, this and that. Well, we'd have to redesign this. And then, okay, how long is it going to take? Well, it's a lot of work. Okay. Well, once we have the trading platform, our members are not going to give a shit about that. They'd rather sacrifice having historic data to get all these features. So as the years went by, or the year we went, features, right? Y'all wanted all of this instead of just, a back test of liquidity map, right? So now that's just kind of why we evolved where we are. It's not like Rocket Scooter is flawed or we didn't think of that. It's that we didn't plan 5 years ago to be where we are 3 years ago and where we are now. So we have to kind of like build the best we can on that framework of what we built. It's like if you were to say, yeah, you built a motorcycle, but then now you're like, I kind of want it to have 4 wheels. Okay, we'll just put 4 wheels on it. Well, that doesn't work like that, right? The entire engine's designed to power 2 wheels. The shape, the design, you need to redesign the engine, redesign the chassis, redesign everything just to put 2 extra wheels on it, right? To give them function. And it's kind of like that. You never thought you were going to put 4 wheels on it. And now you want to. So by this year, as we wrap up this optimization, our marketplace is out and all these cool things we're making, one of the first features type thing is to redesign that architecture so that we can have historic data and backtest. That is coming. Somebody was asking that the other day. But it's just not. Yeah, I just want y'all to know we work our asses off 24/7. Our team is really good, and it's just a lot harder than y'all think. Some of the folks here. A lot of the wish list items are like that. And we're listening to them. So what we do is like we scope out a bunch of projects based on, what makes sense. My cat's here again. Okay. So what you'll see is that markets went up today. I had no visibility on how high it would go or where it would go, where we would stop. I didn't have any really clear understanding of where it would go. I clearly didn't short this. Let's look at my choices. What did I do and what didn't I do? Let's talk about what I didn't do. That's one of the easiest types of analysis. Let's start at the top. Let's talk about all the things we know. Okay. I'm going to pop quiz. Everybody type in chat really quick. The answer's here. Let's start of my bias. The first thing I ever do is I form a bias. Okay. DD ratio, 0.95. Bullish DD, bullish positioning. S&P, above MHP. Okay. Monthly map. So this is bullish hedging structure for the month. This is bullish positioning of the stocks in the index. Monthly map. Bull stronger, bears covering. So just on that alone, am I looking for longs or am I looking for shorts? Starting off, everyone answer really quick. So as Wildfoot says, yeah, does that make sense, Wildfoot? Because what it was that at any point in a month, the iron wall, back a year ago, we didn't have history of monthly maps and we just invented it. We'd manually draw them every day, right? And it was like, the theory was that monthly had such a shift in positions on monthly expiration. The very following day was a whole new environment that it really just wasn't useful to look beyond a monthly expiration because that's when everybody's shifting to the next month. That's when sentiments change the most, right? So when the developers and I were like, okay, so when we calculate a monthly map, then you don't need to be looking and calculating 13, 14, 16 weeks out because you're only really trading on the first month worth of data. So we needed to make some haircuts to make liquidity maps I'll calculate in the first 30 seconds. And that was an obvious haircut. Was we don't need to look 5 weeks, 6 weeks out from video, because if you only grab 5 weeks worth of data, which is what we actually grab 5 weeks worth of data and display 4, as long as you grab 5 weeks worth of data, you will bump into the monthly expiration and you're good. So the display reflects the drawing of 4 and the pulling of 5. Some months will have 5. And that was a design choice to haircut the data early on. Like if you remember the early platform, it wasn't like liquidity maps would just pop up really quick when you switch tickers. It would take like load times. And so that was a choice that we made for that. But yeah, so hopefully that makes a lot of sense. So people ask like why things were, a lot of the design choices were compromises based on like the available overhead we were willing to cover at the time. We were a smaller community back then, you know, in December, God, you know, we have 1,800 active users right now, 5,000 user accounts. You know, a year ago, we probably had a third of that. So as we got bigger, like we're building more into this architecture. Okay, so I would be looking for longs. Yeah, great. You guys answered the question, good. But it's neat that everything does have a history and a choice. Nothing's just done like willy-nilly. The idea that the stocks weren't doing this means that would come in faster. But now we can do all of it though. Now it's the ability is like, you know, the servers are in a way that we can handle that load. We've upped the power, and there's a lot more servers doing calculations, and it's split differently, and there's a better framework there, such that we should be able to do that pretty easily and do the back test. We just need to redesign everything to do all that. So, and there's one bigger project we're going to do so that you can have historic liquidity maps on previous days, so that you can have a back test. That same project would encompass extensions of monthly maps to all the available options expirations. So that one bigger project would be designed to house that. And this is only unique to our indicator, because our indicator pulls data, stores data, calculates data, and outputs data. Like if you had a technical indicator, like if you join our marketplace with a technical indicator, you wouldn't have a problem with that, because technical indicators interact with the candle chart. You just send an array of data and then it draws natively in TradingView. Our indicators don't interact with TradingView's like internal drawing mechanism at all. We draw it ourselves. We put coordinates and say TradingView draw a box, TradingView draw a line. If you feed like a data array to TradingView, that's an indicator. TradingView will convert it to candle duration snapshots and just draw it internally. So that's easy. You can have this, like if I were to create an indicator that used TradingView's mechanisms like that, then it would just draw historic. But you can't send like a custom array of hedge pressure data to TradingView and have it just draw it for you that easily. You have to kind of make it from scratch. So that's kind of the difference. So our marketplace folks that build like just technical indicators, just shows up, pops up historic. We have to create our own historic drawing protocol. Okay, so I'm looking for only longs. Great, everybody had a chance to answer. I'm only looking for longs, and let's talk about it. SPY has bullish hedging structure, which is a general upward float for the course of the month, and we've seen over the course of the month, SPY is pressing higher. DD ratio is 0.95, so stocks themselves are bullish. Markets are likely to break upside less than down if the SPY is tracking the stocks, and stocks are strong and bullish. Maybe the market could fall in bull territory, but it's strong enough that, you know, there's going to be bounces on the greater term. So between now and expiration, let's talk about it. Here's now. Here's MOPEX. That in general, monthly hedge pressure just has a gentle float up, and stocks are bullish enough that dips are likely to get bought because of DD. Bull zone supports are going to find bottoms. So the market is trying to go up and dips are going to be bought. It's two things tell me that. So I'm going to look for longs on dips to be bought. And the monthly map shows just a general overall projection into the future that the market's more bullish and bearish, at least on the short term as well. So positionally, so this is the positions of the stocks in the index. This is the position of the index itself projected forward. And the index itself also shows supports and bullishness. Great. So I'm looking for longs. All right. So what did I do today? I didn't short. That's number one. Perfect. So my bias is I'm looking for longs. Now my trade plan. Okay, we get up and look. Already out the door, outside of DD band. That's red. I'm trading small, if anything at all. 10 to 20% if I even touch this. And you guys know me. I personally don't trade outside DD bands ever. Usually ever. It's a very rare time I'd ever want to do that. You can trade whatever you want, but I don't trade outside DD bands because I don't like to trade volatile, choppy randomness because it's volatile, and the volatility, while I didn't want to short, I could have long. So my inclination, had I just fired a random trade to long, would have been right, but I avoided it anyways because that volatile choppiness could just very well have moved with the velocity to the downside too. And even with the small position, I just didn't want to take the gamble. I know it's a gamble with a big move up or a big move down, and I don't want to touch it. So I stayed out. You guys, if y'all want to trade it, you can, but you know that we use risk management rules, and if you were in the boat of trading, I recommend you trade small because it's choppy and volatile. A small position would have made a big gain on such a big move, 20 points. You don't need a lot of position to get your decent gain. Confidence is low, so my bet is small. Okay, trade plan. I don't trade outside DD bands, so I just sat out. Had I fired a random trade, I would have longed because all the other three things were long. Now, liquidity map, resilience, and DD. Let's analyze those. The DD ratio shows bull zone support. That's the DD rule from the cheat sheets. The resilience being positive shows that we flux from here to the box on the inside and the box of support on the outside. Anne Marie is asking me about that today. That trade. Now, while I did detail, I would have longed right there had I been trading. Even if I were trading, it would be this much, and I still didn't do it. Yeah, see how everything I teach, I do. So one thing that makes these streams so valuable, I do everything I teach, and I don't break my rules. And while, you missed out on a trade, I didn't miss out on shit. I made 17% in 2 weeks on the entire account. I missed out on nothing. Probably doing better than most people trading. So I don't look at this as like spilt milk. I look at this as saying like, I'm even proud. Yep, if I would even chose to gamble, hey, I would have been right. But hey, I didn't gamble. That was also right. So not only did I could have won if I would have taken a trade, but I didn't lose anything because I knew what was going to happen, kind of. I knew it was going to be random. I knew I couldn't predict the direction. I knew it was going to move quick. I literally draw this wedge like this the entire morning saying the volatility is going to increase. And then boom, look at this gigantic ass V you got out of nowhere. And it could have very well gone the other direction. And so you can kind of like understand the environment you're in, and it's really strong. Last but not least, liquidity map. Open, bull open is a trade, so this little V is present, and then if you support at the open, which is this, it also trades. So resilience and 1A on a liquidity map line up. So you have support here at DD, support here at hedge pressure, support here at half gap. This little range is extremely strong support. So had I long, like if you rewind the stream, I said I would long right here. I would long again right there. I might just not take that long on DD bands, but I'd like to do is I'd like to follow the hedge pressure and long right there and take the trade. That's exactly what I did at the start of the stream because that leg is common in each one of these legs. All three of our entry rules has this leg right there. 1B on BLU, flux to the box on res, bull zone support on DD. So when I look at all the things I said I'm going to do, I said I can long here, repeating long here, and I'm not going to do that. So I'm just going to wait. I'm going to miss out on that if it goes. I'm going to take a long there and trade it to there and call it. You guys remember that today? So when you think about it, it's like being able to see what you want, and I wouldn't have taken the wrong side of the trade had I guessed. That's very important too, is that even if you choose not to trade, you have to understand if you know, you use the best tools that you have available to pick which side you would not have been on, if you can. Joining the side of the market when people always ask, as we had like a 2-month sell-off, right? Sell-off-ish. People are like, we don't understand. Why is the market pulling back when the DD ratio is so high? Well, this is your answer. The market is just gently pulling back in a bull market. And eventually at some point, the bullishness is going to come back. And now we're seeing that, right? The last couple of days. I told y'all, don't doubt what we have here. All the bears came up and they're ready to like short the farm and buy directional puts. And DD never faltered this entire time. It's still bullish. And people are saying, well, how does DD work? Why are we selling off in a bull? If it's been bullish, why is DD not bearish? Because the market's not bearish. It's still bullish. This is the greater markets, and this is options that extend all the way out to the end of when options expire. You got many, many, many months in the future. You can pull back. With DD being greater than half, you know you're just pulling back in a greater bull market. It's not bearish. So I'm not out there trying to take shorts. I don't see these red candles and say anything other than, well, I'm going to get a dip to buy somewhere. I don't see this as time to short the shit. That's the whole point. DD is telling you that. And I know when we got the Fitch downgrade and monthly map shattered and we knew, God, it's not going to be super bullish from here. It's going to be kind of volatile and choppy and probably going to trade down a little bit. None of us were like, okay, where do we short? None of us. Nobody here. Well, I don't know you guys, but none of us in my team. We're like, okay, where's the dip to buy? When's it going to turn back around? And ultimately, at some point, it's going to find its bottom and it's going to turn around. Y'all see that? So the idea is that DD was never broken. DD is not a technical indicator that's going to flip-flop every day. It's only been less than half 2 times this year, and it was barely less than half. That's how strong it was. And proof is in the pudding. Here's this year. DD stayed bullish, and the market's trending up on a longer time frame. So we've just been pulling back in a greater bull market. So I'm still looking for longs. Even through here, I never said bearish market. I said, well, we probably hit the top for the year. We're probably sideways to flat, and that's all the information I had. And it's been pretty accurate, right? This number will go bullish when it's bullish, and we'll go bearish when it's bearish. When stocks are finally bearish and the market's done with stocks, it'll turn away. Markets hold. I can't wait till this fixes. I might try using something different than edge, because this axis violation looks like it's like an edge thing. It fucking sucks. Okay. But just keep that in mind, you guys, that our tools really are that good, and they're good because you're seeing it now. The market is irrationally trading higher today on a short squeeze. Looks great. And that's something that does happen when, you can see that we've been pulling back in a greater bull market, and it's not necessarily a mass liquidation event. Well, let's look at it, right? In general, here's the net long position of the S&P futures, asset managers, and the community of traders. There's just pullbacks in a greater bull trend. They're not liquidating majorly. They're pretty much holding the fort. 666,000 contracts is as high as it was back here at the high of the market. This is nothing to laugh at. This is people holding on to their longs and not really jumping out mass exodus, right? Now, we did have some selling the last month here, but that's just 1 month, right? We can all see that the bulls are, it's not starting to trend. We're not seeing waves of trending down like here that ultimately is going to spin the market around. If we start to see waves of decline, that market's going to ultimately turn its head around and go away. But tops are always a process. Don't take that first turnaround as a sign that is like markets are crashing. So refreshing everything. I wouldn't have shorted. I would have made my trade from, all 3 of my supports. There's support from bull zone. There's the V shape from the BLU. There is the push for resilience to go through the box. And then outside the box, the resilience has support there to go. This has support on the next trade to go. Typically, this one goes to next resistance. I went and looked. I couldn't find one. So I didn't have a reward to gauge my risk against. So I didn't take this trade. If I normally trade from here to a red line on a bull side, I will take it with 20% of my trade normally. If I could find a quick red line in the way or something, some kind of illiquidity pivot, because we don't have anything up here. We're outside of DD bands. It's no man's land up here. You got to find something to trade to justify where I want to stop. I need reward and risk together, and I don't have one. I'm just long to some arbitrary level. I want to long to some resistance I can find, and we're trading so internal right now. On the greater sell-off, it's kind of like we're tracing the middle. It's just like this choppy range where I can't really identify a good trade today. Tomorrow we'll probably be inside of tomorrow's DD bands, and if we get a trade up, then I can trade to a band. Like I say, I like to scalp to the band usually and call it most days. So I didn't short. If I would have traded, I would have traded small. Had it gone way against me, I would have stopped on hedge pressure below it. I would have stopped if resilience went negative. If I wanted the long, I would have done exactly what I mentioned today when Anne-Marie and I were chit-chatting about when's the best time to do it. Is like I say, normally if it's really tight like this, I'll long right at the open. And then double down right here and close out. If it's just a really small, like if it's less than 10 points of drop, I'll long and long again. If I miss out on this move and it pulls back to there, I'll usually will jump in right here if res is healthy and strong, which it was. It was like 80%, it still is 80%. Even on the pullbacks, it was bouncing 50, 60%. That's strong enough to support the box. If you guys go to our, your cheat sheets, it gives you all the information there. So this is extremely textbook today, right? Here's your bullish resilience, top of the box support, top of the box support. Here's your DD ratio. Here's bull zone support. There's bull zone support. And then there's your liquidity map. BLU is hedge pressure support. And if you support it open, the resistance. So like BLU leg right here is the same bounce on the top of the box because this is the open price. This black diamond is the open price. The open price supporting your resistance is the same thing as the open price supporting to resistance. So resilience and BLU lined up. Outside of the box, BLUs are great to long off the box. I do them religiously. It's one of my favorite trades. It's the gap and go trade is so easy to identify. It's just if I don't know where it's going to go to, I kind of wuss out. Okay. What is UVXY doing? Nothing. Bouncing off a hedge pressure today. Actually, this could have been, you know what? This could have been something to take note of. There is a way to get out of the long if I saw it. Anytime I see VIX can pivot and bounce higher, I'll close out on a long. So if I were in the long, I guess we had this rule too. I didn't notice this, but I would have closed the moment VIX hit a resistance and called it a day. So let's look at this one. We had with that UVXY roll video, 933. So right at 933 would have been right there. How fucking beautiful is that? Now I overlooked this, so I was too busy talking. Good call. So anytime you're longing anywhere and you don't have any kind of resistance, another trick is to double check if VIX is going to give you a pivot somewhere. So had VIX bumped into hedge pressure. So anytime VIX hits a bull zone bottom or hedge pressures, I'll close out on my long. Yeah, volume spikes as UVXY touches hedge pressure. Yeah, you can see there's that volume spike right here, right? It's the biggest volume spike of UVXY for the day. And then of course, you can see S&P also had some volume interaction right there as well, right? This just stretched to the extent of where the volatility was. And so that would have been actually a mappable day trade. Now I don't have, you wouldn't know an exact target. So had I taken my long with like 1 to 2 micros, I would have held and then probably closed when I did have a resistance. The spontaneous volatility that could happen whenever you do bounce on a support on UVXY does create bigger V's. So here we go. Like markets moving up here, and now it's starting to be a little volatile, right? Anytime VIX can hedge itself higher, things start to get a little more turbulent. So this could have been, but it's hard to map out where S&P price would be when that would happen from right there. But that's something to note. If I was long, I 100% would be closing out right now on a day trade. Good call. Yes, pivoted, Andrew. Oh, and see, I might have missed that too. So that's something I didn't catch. Thing is, I basically share the secret sauce to your system. Finding these people, you don't need rules. Like you can just print money all the time. And that is one thing that I mentioned earlier, is that people just, you have to understand that control is the secret to success in this world. It's not about printing money all the time. It's about not losing the money that you came in with. And if you're good, you can walk away with some more. But capital preservation, emotional preservation, is that I only trade within my realm of confidence. And if people are learning from me, you can learn my style of trading. It's going to require patience, taking it slow, not taking abnormal risk. While the small account is growing, 2 weeks, I know it doesn't sound like much, 5K to use a 6K. It only gets exciting when it's like 50 plus K, then we draw a crown. People are like, ooh. So you're in the range of making like many thousands or losing thousands a day rather than making or losing a couple $100 a day. But showing that growth from a small account is something I've done for years. I love showing that, showing the full history. There's the account balance. I put 5K in there and it's almost at 6K. Just trading it up little by little. I never really dipped below 5K. I've been taking it slow and then appreciating an account. And I do this because y'all love to see that happen. You'll love to see me fire off trades. You love to see me use risk management when it really matters, which is, well, I mean, all the time. But even up front, you're getting started as a trader. You have $1,000 to your name. You want to start trading futures. And you go in, you're going to learn from a guy who didn't make a trade 3 days in a row. And you're firing trades every day. There's a difference between you and me. As the years have gone by, I've learned the less I do, the more money I make. Literally, the more money I make. A whole lot more. If I'm careful and I plan better, that's where I make more money. When everything lines up. So I tell myself, and I guess this also has to do with maybe I'm fortunate for this situation. Maybe you might not be in this situation, maybe you are. This is an unfortunate paradox. If you are already rich or already have a lot of money, you don't need money. Now, 2 ways to go about that. If you're already rich and don't care about money, you can be more prone to gambling. If you're frivolous and just have enough money to replace it, you can make stupid mistakes because you're not valuing your investment and the risk associated. You don't care about the risk, maybe you're just reckless. Not everybody with money is like that. Most people that have money they earn instead of money they were given, like an inheritance, most people that earn their money know how to earn money, know the value of it. So they're not going to be reckless with it. But the thing is that whenever you do have money, you get an added bonus that most traders that don't have money don't have, is that you don't need money tomorrow. If you need money tomorrow, say an example is you have say that I have $1 million in my pocket and you've got $1,000 to your name and your rent is due in a week. You're more prone to make a trade because you need money very quickly than if I had been the case that I'm the guy with $1 million. I'm like, I don't need money tomorrow. So I'm more comfortable sitting out because I don't need to make money. There's no urgency for me. And that's one of the paradoxes of being a trader is that the wealthier, better you are, there is no urgency you have to make money. So you're comfortable not making anything. You're comfortable sitting out. You're comfortable missing out. Now you can try to adopt that philosophy right now with other things besides trading. Be comfortable missing out on opportunities because you don't need it tomorrow. You don't need to sell your house exactly tomorrow. I mean, you don't need to do big things tomorrow. If you don't need it, the goal is you have to try to trade into this mentality that you don't need the money you're going to make. Even if you're making money as a trader, try to train yourself that you're not going to spend it on anything, that it's just numbers in a trading account. That way you don't think that, okay, I'm going to make some money and pay my rent with it, or make some money and pay my mortgage with it, or make some money and got to make my car payment in 2 weeks. These are things that make traders trade more than they should. And you tend to run out of time and you're susceptible to the randomness of what the market hands you. Shit, it's Friday, I need money today. Well, I better make a trade today. Let's go. I've never said that. And probably early on, I don't say that. I don't know how many years. I've never said that. I need to make a trade because I need money tomorrow. I got bills to pay. Never. And if you're in that mentality, you get an added bonus of not having to trade every day. There's no pressure on you to do so. And I even have abnormal pressure beyond that because everyone's going to face that pressure. You overcome that as a great hurdle. Don't need the money you're going to make. It's your nest egg. It's your retirements, whatever. Have other money to pay your bills. Have a storage of money to pay your bills so you don't have to need it to pay your bills. The second thing is I get pressure from you guys to make a trade. If I'm sitting here sitting out, it doesn't look as sexy as someone YOLOing options. Fewer people will look at Rocket Sphere and say, oh, I'm going to take this out. This is boring. Well, no, it's not boring. I'm the one really winning. It's not boring to win, but it's not sexy. The takeaway from this is not the winning trader is not a sexy approach. It's not flashy. It's not money like flowing from every direction, every trade. It's methodical and it seems boring to the new person, but it's not boring to be rich. I'm going to tell you that straight up. It's not boring to not need money tomorrow. It's not boring at all. It's like a master chess player planning every single move before they act. It may seem boring to the average person, but it's what all of you need to aspire to be. Don't need the money you're going to make so that you're not forcing yourself to trade. And don't let any pressure elsewhere, like being on a stream where people are like, you need to make some more trades. I want to see this in action. You are seeing in action. You saw all of my thoughts that went into this, and I described the market exactly, the pivots exactly, even the direction I would have guessed right had I guessed, and I still chose to sit out. That is more valuable than watching me make money today. The lesson of being in control at all times. Control, like the controlled behavior that you have is where you aspire to be. Don't let pressures make you overtrade. Overtrading is what gets most people, and like what they're saying earlier, that emotional fatigue. The more you do, just the more you can get blindsided or distracted, and your losses can be big. So I've learned that my style, I'm really good in trading the first couple hours, and I call it, get in on one trade, get out. Either wins or it loses. Over time, it grows. I'm not making flashy, risky gambles. I'm not in a position where one bad trading enables up the account. I mean, I've learned to control all those pieces, and it's a slow journey just to wrap your head around that. And it's going to take a lot of you years. I mean, guys, y'all might think I'm, some kind of trading savant. I'm not. Or you might think I'm like the best. Somebody said I'm the best. Honestly, appreciate the compliments. I didn't walk out the door being good at this. It took 5 years before I went full-time trading. 5 years of struggling to figure this out when I started. It wasn't all those emotional hurdles. Yeah, I'm a smart guy, whatever. But that wasn't the hurdle. The hurdle was the stuff I'm telling you. Over trading, needing money back then, 10, 15 years ago, like young kid, impatient, seeing people make big gains. I want big gains too. Oh, I had the dream of making all this money. Ooh, let me get in big trades. Like all those things were my battles. Same thing everyone has here. But I learned that if you try to just take it slow like this, and I balance my futures position based on size of my account, I ratio it appropriately, it grows as a proportional size of the account, and it just naturally grows bigger and bigger and bigger as it grows. As I bigger position size, it grows. And the patience to watch something grow is something you just can't teach somebody. Like, hey, you need patience tomorrow. Usually it's carved through hard knocks. You learn it as a survival technique. You blow up, you start over, you try something different, you blow up, you start over, you try something different, and ultimately you land on the idea that you need to take your time and be more methodical. And a lot of times people don't just wake up and walk out the door with that mentality. They don't have the self-discipline, and that's rare to walk out, with the discipline you need to do this. Most of us, I'm sure Anne-Marie, she's been doing this for longer than I have. I'm sure she could say the same thing. She's a futures pro. You carve yourself slowly, like into like that emotional state to do this. Like you just don't. Most people aren't born to be able to play poker for a living. It's not easy. It's a whole lot of things that just you're trying to like control yourself in this random environment and weigh out odds all day long is decision making. It's not like a rigid science, the stock market. It's not like you can just learn how to do it, like be a doctor and everyone treats pneumonia the same way. It's not like that. It's like everyone that does this does it differently. And so you can't even learn how to trade in a universal sense. You have to learn someone's style of trading or someone's indicators of trading. That's proof that it's like a hard journey. And in reality, as somebody said, which was a beautiful comment last night, they said rocket scooter hedge pressure is just a horizontal line. I think they were trying to say the idea that people are looking for a holy grail, and I agreed with them. Like, there's no holy grail that works all the time. Our system and style works very well under preset conditions, and I avoid the market when the conditions don't line up. That's the smartest way to trade. Find your niche, stick with it. And he was like, but in general, you know, hedge pressure is a horizontal line. You can take any horizontal line on a chart and play off of it. As long as you have risk management, you're doing something right. The only thing that you don't know is that line may or may not create a pivot. But either way, you can still control yourself with anybody's technology, anybody's indicator, anybody's whatever. You can always behave. You still got to use risk management. And that's a great quote. I kind of like that saying. Any horizontal line you can trade from. It's pretty true. The reason, you know, some of them have higher probabilities of bouncing, like hedge pressure, for instance, than a random horizontal line. That's why it's useful. The chance of it bouncing is much higher than just arbitrary picking a number. But at the end of the day, the success is not having the right horizontal line that works all the time, and you're floating on a system that works well. The ultimate failure of a trader with a good system is still the trader's behaviors and emotional control. Even with the best system with no control, you will eventually mess up because the system's not going to work all the time. The best system will have conditions. Maybe you missed something. Like I forgot UVXY rule today. Overlooked that. Maybe you, maybe a catalyst happens. Maybe something random happens. Maybe the system works 30% of the time. Maybe it works 70% of the time. The times it doesn't work, you have to know what to look for when it doesn't work and have control in those situations. And so even with something that has better probabilities, the failure point is never a system when it comes to traders. The failure point is their behaviors and actions. And you have to be in a place where trading matches like what you're comfortable with. Here's what I'm comfortable with. I don't need money tomorrow. This money in this trading account's never going to pay a single bill of mine. The unfortunate paradox is I don't need this to make money. So if you're trading, you need another source of income while you're learning trading. And I tell everybody that. Don't quit your day job unless you've got years of bills money saved up. Your trading money shouldn't be seen as this is money that's going to buy me something next week or next month, because it's going to make you need it. You need to trade like you don't need it. You need to trade like you can lose it all and still be okay. That keeps you pure and trading just for the sake of growing the investment. You're not trading because there's additional emotional tug, like you need it, like you're drawn to it, like it's gonna make you make desperate trades as the deadline approaches because you run out of time. No deadline on this. There's no deadline that I can hit. They go, "What's your target, Matt?" I said, "What do you mean? What's my target?" The small account challenge. I go, "I don't know. Maybe I'll just 100K and start over." How long do you think it's gonna take? That's dangerous. I haven't put any deadlines on this because I'm not going to try to make it happen in a deadline. The market's in control of how much I gain. I'm in control of how much I lose. If I set a deadline, I'm setting myself up for failure. And I want y'all to understand, that's the lesson here before we get out of here. As the deadline approaches, I'm going to be like, shit, I need to hit my goal. Let me make some trades. No, don't ever fall into that trap. Set a goal. Okay, I'll stop the challenge if it hits 100K. Okay, sure. That's what I said. How long do you think it's going to take? I don't know. I don't want to know. I don't want to think about a deadline. I don't want to think about a time frame. So you guys are saying, hey, Matt, when setting up the futures data, we need to top a book, right? Yeah, Chase, dude, just top a book. Level 1 data. $1 a month. Andrew Chase, Emery, spot on wisdom. Only people who have been around a long time know this. Henry, oh, thank you. Thank you, Matt. You're welcome. Toughest part is make that switch to full-time and have savings at least 6 months of surviving. I tell people have a couple years worth of savings, because even if you trade for 6 months, it takes years to really like carve out this. But even if you quit trading, because most people quit within like 6 months, usually 3 months. People get into trading 3 months later, they quit. You don't want to quit with no money left either. You want like years of money so that you can quit trading and find another job and still be okay. Don't ever be in a position where you don't have an abundance of money if you quit your job full time to do anything, not just trading. You always need to have a backup to your backup. I always say it's good to have 2 years worth of salary saved up in some way, shape, or form so that you can pay bills and survive, and your trading money is not going to be your means of survival. Now, as you get better at trading, yes, trading pays your bills if that's where you want to do it, but you're not trading to pay your bills. You have a pot of money that pays your bills, and trading just refills that pot as it pays out a little bit every month. So you never feel a sense of urgency to make a trade. That's kind of the ideal situation. Having cash flow from business made trading much easier for me, and that's myself as well. Like people say, what do I do outside of trading? I invest in a lot of things. I plant money in places. Part owner of this, part owner of that. I build trading platforms with my money, things like that. Yeah, you should always have subsequent sources of income as a human being, not just as a trader, as anybody. If you achieve your first goal with your, any normal job these days, people make pretty decent money to have some savings. Invest in things. Like, it's always good to have investments that you can tie into an emergency situation to get some cash. Houses, businesses, whatever. Yeah. Forcing a trade because you need to make money to live is the worst. Been there. Very much been there. My first year of trading had that mentality. I got a severance package when I got laid off as an engineer in 2010. Let me try this day trading thing. And the feeling was there because that's a limited pool of money. Nobody was hiring in 08, 09, 010. Markets were crashing. So in 10, people were starting to get laid off. It was going to be a while for things to get back to normal. So I felt that burn early on, like, okay, I saw if I don't make money, I'm going to run out in X number of months. And yeah, the pressure makes you, absolutely, it's the worst. You don't have that pressure to touch all the water. You must adopt the mentality. Oh, I love where I said that the market gives unlimited trading opportunities and only take good reward on risk trades. Really, there's always a trading day. And like today, I missed out on the move. I didn't miss out on anything. It's just another day. Unlimited opportunities to trade. Yeah. I have rules I follow. You guys get it. LJ with the heart emoji. Oh yeah. Outside of trading, where I like your girl. Oh, that was your question, Rowan. Yeah. Right now, I'm trying to grow my money by investing in a trading platform in a marketplace. Building companies, building businesses, investing in other avenues, businesses. I want to get into more real estate focused stuff as the years go by, but I just don't think right now is the best time to do that. Some of my friends in my town do commercial real estate. They build, like one of my buddies builds work co-ops, and he builds a ton of them. And that's one of his side hustles. Another friend of mine runs a company that builds doctors' offices and hospitals, like those emergency clinics and stuff. They build those for people. Guy's like stupid rich from it. I think where the real money is at is like commercial real estate. That friend of mine on his Instagram last year, most people show pictures of their Lambos or whatever. Not only does he have a garage full of classic cars, but he also has a tank. People are posting their Lambo. He's posting a picture of him hanging outside of his tank that he bought. Fucking tank. That's real fucking money. And so, but this jokes aside, trading can be used to carve out a living. You just have to keep it that mentality. My suggestion to everybody is if you don't have the money to pay your bills, try to make it as a trader. Trader funding programs all the way. Just do that until you can save up money. Don't waste your own money on this shit. Trader funding programs. Spend the $15, $20, $30 to get the trader funding program and try to get a paid account. You're going to pay a jackload on taxes, but it doesn't matter because it's going to be cheap for you. Keep your day job, trader funding programs, they run promotions 80, 90% off, get the eval, start making some funded accounts, try to make 10, 15 grand out of those funded accounts. They pay you out, take the money, start saving up those payouts. And then now you got a pool of money. Start taking 5K of that pool of money, 10K of that pool of money, and watch what your buddy Matt does and try to appreciate that 5K account. What happens if it goes to zero? It doesn't matter. You got a pool of savings. What happens if that goes to zero? It doesn't matter. You still got your day job. There's your backup to your backup. Trader funding program is what if you don't have years of money saved up to go full-time day trading and you need money to trade with. Trader funding program is real risk and real reward. You get real money if you win. You only pay a monthly fee if you lose or pay a monthly fee. So you're going to treat it seriously like real trading, but you don't risk anything. It's that happy medium to try to get good at trading. With real rules they force you to follow. It makes you have a method when you trade and you're not really risking much. You can always bounce back in for the $30 it costs to jump in one of those things. Gold Marie took her 5 years to crush your ego. It takes a while, right? And it all depends on how you are as a person, how you're raised, and everyone's so different. Trying to find a profitable opportunity in an unstructured environment. Yeah, for a probabilistic opportunity. Garrett's right. I was too afraid. Chase says he's too afraid to trade. Always been too afraid to lose money. So getting the courage to do it. So Roxy helps you do. Solid. You finally figure out the decision-making process more important than the decision outcome. You started making money. Peter, there you go. Recently just Chase moved to Georgia and employed, so kind of need money, but I'm still following the rules. Eventually you can step things up and balance in their trade days. And so everyone's situation is different. Like I described an ideal situation. Not everybody's going to have that ideal situation. But if you're in the place that you want to trade to make money, to pay bills, and you don't have the repository of money to pay bills, to avoid that pressure, trader funding program is the way to go. I mean, it's cheap. The outcome is good if you're good. Usually they'll pay your first 15K or 20K profit. They'll pay you without taking a cut. Then trade to that level and then take the money and close on the account and then put it in your savings and build that way. You know, if you lose, you're going to lose the monthly fee. If you win all the way to the end, you make 15K or 10K or whatever it is payout, and keep taking stabs at this. It doesn't cost much at all. And that's a way to start building a little bit of a savings, only if you're really good. And they're also really hard to pass relative to normal trading because the rules are stricter. There are some that are easier than others. We have videos on which ones to do. But if you do pass them, I remember you guys watched me I had 3 of them on stream back to back, 250Ks and one 250K, and I passed all 3 of them for $550,000 in funded accounts. I didn't use them. I used one of them, like close to them. I used one of them just to show it off, and how to pass those things, to make the videos on how to do it. It's not a terrible way if you're good. It's harder than regular trading, which forces you to have extreme discipline. It's not a terrible environment to practice in. It's a great practice environment. I tell everybody that. Emery from Mark Twain, invest in land. I hear they're not making anymore. I love Mark Twain's. All of his quotes are so good. Tell the story. I was folding tells, losing. Oh dear God. My first trading breakdown. It's my first big loss day that was more than 5 figures, which is a lot. As a 6-year-old kid. 28. How old was I in 2010? 28. Yeah, I was in a, markets dipped. Markets are rallying after the big 2010 dip. Markets are recovering. I jumped in right in the middle this summer of 10. or maybe late summer of 2010. I was buying bank stocks, and they would go up and go up and go up and then fall, and then go up and go up and go up and fall. My genius theory was that governments are bailing out banks. Why not buy bank stocks? Well, that's a great idea over the longer haul, sure. But day trading, I didn't know what I was doing. And one day I just took a trade. I was convinced it's going to work. I probably did something stupid. I don't even remember all the aspects, but I remember losing, and I ended up being in a situation where I was like all in on the trade. I was over leveraged. I didn't have any rules. That's when I realized I didn't know what I was doing. I didn't have any rules. I didn't have anything. I was just winging it. I had some confirmation bias because out the door, my first bunch of trades were all winners, and I was like, oh, pff. So I got cocky out the door. So I was a little reckless. And I just was like bag holding and watching my account just whittle away. And I was just like freaking out. And so like, instead of closing the trade, I started distracting myself by like doing chores and, getting up and straightening up the office and then peeking at the computer, then getting up and like vacuuming and peeking at the computer. And just like, okay, let me just kill some time. I'm freaking out, but let me do something to stay busy. Then I started doing all my laundry and folding on my towels. And like, I had like a pile of towels on the floor. Like here's my desk in the background. Here's the computer screen. And here's like a little mat sitting on the floor. My legs crossed. Folding towels and stacking them up neatly over here. I would peek over the stack of towels to look at the computer screen. Oh shit, it's still going. Okay, come back. Fold towels. And eventually like I folded all my towels. Right? I folded all my laundry, folded all my towels. And I was freaking out so much and had nothing else to do that I pushed over all the towels to turn it back into a pile so I could fold them again. Like I had a temporary bout of insanity. Like I didn't know what I just wanted to keep my mind off of, I kept peeking over the stack to stare at the computer. Just like, oh my God, please turn around. Probably praying, probably whatever. Like all the emotions you have, just completely just fold the towel. Okay, unfold it. Okay, fold it again. Like, it's a pretty good metaphor for like what happens in your brain, right? You're just absolutely lost. You have no idea what you need to be doing right there. You're just trying to distract yourself with anything you could find to avoid staring at a loss. What an example of doing everything wrong all at once. That needs to be, hell yeah, that does need to be a meme. But I just remember trying to stay busy to just not look. I didn't want to see it. Like it's like a kid laying in his bed. As long as you pull the cover over, you don't see the monster, it can't get you. Like as long as the cover's over your eyes, it can't get you. As long as I'm not looking at it, that's not a real loss. Like what? I mean, those are the things that happen, and you don't know. Like people don't know. My last thing to say about this, before I get out of here, is you don't know how you're going to behave in a situation like that. Everyone says, "Oh yeah, I'm totally fine. I'll be fine." You never know what you're going to do in a moment of passion, or a moment of like emotional distress. No one knows what they're going to do. As a matter of fact, the science behind that is you can't tell when someone's born if they're going to be afraid of heights or not. There's no condition that makes you afraid of heights usually. The only time you know if you're afraid of heights is if you walk up to an edge of a cliff and look down. Do your toes tingle or do they not? And you don't know what you will be until you get there. No one knows until that moment in time. So you don't know what you're going to be until you hit that spot. You don't know if you're going to have that resilience. You don't know if you're going to be like an emotional mess like I was. Each person's different, and the problem is sometimes people get there and they lose everything in that first moment, and then they never go back and they can't recover. So hopefully like out the door, we try to teach you rules, discipline, stay there, because when you hit your first moment like that, at least you got some rules. When all things boil down, you can, okay, take a breath. Okay, Matt did have these rules. Okay, I should trim my position, or I should close out. I know I'm breaking my rules. I need to slap myself in the face and get with it. I didn't have any rules, so I didn't know what to do. I was absolutely clueless. Praying was the only answer. Emery said, been there. You know, you're banging your head on the desk. You just like take a shower and just scream. You're just like, don't know what's going on. Everyone will do something completely different in that moment. And if you're the kind of person that just loses your cool, breaks down emotionally, forgets everything you know, and you're just completely wild and irrational, I don't think you could ever know that you would be that way until you got there. And so when you get there, you have to at least have a parachute on your back. And that's why we do what we do here. All right, I'm gonna get out of here. I love you guys. We'll see y'all later. Great day today, everybody. No trades for me. Taking it easy.
I don't know. I can go check and see there real quick. I don't know. I can go check and see there real quick.
All right, guys. We'll see y'all later. We'll have a Zoom call closer to market close today. We love you guys. Thanks for tuning in. We'll see y'all later. Have a good one.